Hi guys, welcome back to the channel. If you're new here, please subscribe to the channel to support it and to see more videos like this where we trade the markets by keeping it simple, by making simple, clear analysis and by using simple and clear indicators. Today I'm looking at Euro Australian dollar on the 4-hour time frame, which is a rather long time frame. I typically trade like 1 hour, 15 minutes, but sometimes I also trade like 4 hours and a daily. I'm using 3 indicators: the bottom stop signal, the levels and zones, the RSI exhaustion. If you are interested in testing them yourself, you find the link in the description down below. So what I'm looking at is this uptrend here. So the price is moving up, but the RSI exhaustion down here is moving down. So the price moves up and the RSI exhaustion moves down, which means that we have divergence. And the first condition that we need to assess in order to have a setup is whether we have divergence or not. In this case we have, so the first condition is checked. The second condition is to have exhaustion. So we want the RSI down here to be exhausted. In this case is bullish exhausted. It's green, so it is okay. It means that the price up here has a little room to go. If it wants to move higher, it's probably going to be limited because it's moving higher, but the RSI is decreasing, and so since it's exhausted, the price can't really go any further than this. So the second condition is checked as well, and the last one is very simple. It's to have a top, and we have one here. It is confirmed because you always have to wait the close of the next candle so that you are sure that the previous signal is confirmed. And when you have all these 3 conditions, which are the divergence, the exhaustion and a top, then you can confidently place your order. Moreover, in this case we also have this amazing resistance up here. So we are using the levels and zones to confirm our setup. So to build the setup, we use the bottom stop signal and the RSI exhaustion, and with the levels and zones we look for extra confirmation. And the confirmation here is that we have a major resistance up here. So the price is likely not going any higher than what it is right now, and we can absolutely confidently say that the price will go down. So the setup will look like this. The entry price is going to be around this level here. The stop loss, well, the stop loss must be at least, if you want to be extremely conservative, you can keep it around this level here, which is approximately where the buy area is right now. If you want to be a bit more aggressive, you can go this low, and even more aggressive, just a bit higher than the resistance level. I think we can be moderately aggressive and stay at this level here. Regarding the target, this is going to be tricky because of course I'd like to see the price come down all the way to this support down here, because this is a major support. But the point is that we have quite some structure back here. So in the recent past the price has made some quite significant structure, and I'll show you, because as you can see here we have one structure here. This is a support. It's going to be a minor support, but it's still a support because the price decided to stop here to test this level for quite some time. And then also here, back here, you see? Then we also have some minor structure down here, because we have it here tested, and then it's tested here, and then here, and then also here. And then finally also around this level here, because it was tested kind of here, 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 and here, 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 here. You see, it's a very interesting level, this one. So if we want to be extremely conservative, we can place our target about here. If you want to be a bit more I'm not saying aggressive, but more optimistic, we can set it here. But to me, the most likely support level, major level among the three, is the last one, so this one, because it was visited multiple times, and it is the one that makes more sense to me. Moreover, if I'm expecting the price to move lower, I'm also expecting the price to move lower than the current initial impulsive movement. It's not impulsive movement, but initial uptrend, minor uptrend. It's a minor uptrend. So I'm expecting, if the price comes down, I'm expecting it to go below this level here. So it should at least reach the middle level, but we can be confident in saying that the most the major level among the three is the last one. So I'm think that my trade is okay. So the risk reward is going to be 3.5, which is interesting. Okay. And guys, I'll keep you posted on this trade. It's moving fast, it's moving very fast. So I enter into the trade, and then the price tested for quite some time the resistance line. This happened frequently, so it really didn't bother me too much, because for the fact that it was going at least halfway into my stop loss, it's totally okay. It happens frequently. I was confident in my trade because I knew that this was going to be a major resistance, so I was safe enough. But then the price just dropped and is going down quite fast. So the first target, the one that we call the most conservative, would have been already touched. I mean, it's already touched, so the trade will have already been over. We are expecting the price to go even lower, and this is also confirmed by the RSI, which is decreasing, and it's also exhausted. And the fact that the price goes down, the RSI goes down, and it gets exhausted is an additional indication that our analysis is correct, and we can expect some more downward movement. I don't know where it's going to stop, but definitely we should expect some more downward movement, because I mean, the RSI has so much room to go lower, and even if it stays like this or around the oversold area, it can stay around this area for a very prolonged period of time and still be exhausted, and the price still continues to go down and down and down. So right now we cannot tell, I mean, based on our analysis, we cannot tell specifically where the price will stop, because we don't have any major level except for this one. We can only see that the price has made some significant structure in between these levels. So I assume that even if these are not major levels, they might stop the price, or at least slow down very much their downtrend. So this is why I decided, because typically I target the major levels or some major structure. Here we don't have major structure, it's just minor, but since we have three levels close to each other, and the lowest one being the most significant to me, I assume that the price might find some trouble going any lower. That said, I still expect the price will move lower from the current level. Within a few more candles we got to the target, so we are now out of the trade. The price went all the way down to our lowest support line, which was this one, which was the target as well, and we ultimately got out of a trade with a 3.5x return, which is absolutely excellent. Because it means that we can now lose the next 3.5 trades straight and still be profitable. And this is amazing. This is amazing because it's not going to happen that we lose 3.5 trades straight. And even if we lose 3.5 trades, we are still profitable, guys. And the average trade that I like to make is something with a risk reward between like 3, 4, or 5. At 5 it's a bit optimistic, but on the lowest end I take 2, so a risk reward of 2. I don't trade trades that have a risk reward less than 2, except for very particular setups with very particular indicators, but otherwise I just take trades which are more than 2, so that the average is around 3, 4, optimistic 5, but then rarely I can get up to 7, 8, even more. So guys, that's it for today. I hope you liked the video. If you did, make sure to like it down below. Also subscribe if you didn't already, and feel free to ask any question if you have any. I'll be reading them and replying to them, of course, and I'll see you guys in the next video.